In this video, I will be speaking about Euro USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting a quite strong area of monthly demand and support. From here, all this previous move to the upside was created. Again, here the market tested its zone and rejected it to the upside. Again, here we had the test and the market is rejecting it to the upside. And since we just got another test of this zone, we could expect some bullish price action to be created away from the area. Dropping down on the weekly, we can see how weekly demand and support has been tested and currently is getting rejected to the upside. When the market created this huge wick here, following this red candle, after that, a huge rejection to the upside was created, and as we're testing the same zone, we could expect a rejection to the upside, which is what the market is currently printing. Going down on the daily, what do we see? Now, from a daily perspective, it will be very interesting to see if we will actually have a successful break above this previous daily resistance, that if it will be successfully broken to the upside, at that point, this previous resistance would become support. So if we do get a successful break above this resistance on the retest of the previous daily resistance turn support, this is where we would have quite interesting price action and probabilities for a potential rejection to the upside and for more bullish price action to be created, which increases the probabilities that if we will have the break above this resistance on the retest of this previous resistance turn support, we would have a potential rejection to the upside. So if we do get the break on the retest, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.